Now, you might remember that recently I talked about the importance of considering cash flow, not just the profit and loss statement when running an organization. Well, as a result, I was asked by a business owner, okay, that's great, but what financial reports should I be looking at? Again, I am not an accountant, but I work very, very closely with a trusted team of seasoned accounting professionals, and I highly, highly recommend that any business owner takes the time to work with an accounting professional. Trusted accounting professional. They're not all created equal, but find the really, really good one, someone that you gel with, someone that you get along with, and that's going to be an awesome partner in helping you grow and sustain your business. So even though we're not accounting professionals and we're certainly not expected to have the depth of knowledge that accounting professionals have, it's still essential for leaders to understand the basics of accounting, the basics of financials, to be able to make financial decisions, to be able to regularly evaluate the company's financial health. And so if we don't have that basic understanding, then we're ultimately letting others make those decisions for us. And I don't think that's a good idea. So what should a leader really know? Well, the most basic, let's call it the most basic accounting 101 version of what we should know to get a good overview of the company's financial health. Well, it all really starts with three essential reports. The profit and loss statement. So obviously that's where you see if you're profitable. That's also where you see what your income and expenses are like, broken down by category. And that is also where you see if your revenue or expenses are unusually low, unusually high, that kind of thing. So that's the first one. The second is your statement of cash flows. So what do you find in your statement of cash flows? Well, it's really there to help you understand what happened with your cash. I talked about it earlier, right? What happens with your cash? So you find that out in your statement of cash flows. And so you see what happened with your cash. You see what came in, what went out. And you also get to see whether it's going up or down. So what's happening with the cash? Now that third report, third financial report that kind of complements the other two is the balance sheet. And so what do you find in your balance sheet? Well, generally speaking, you are able to keep an eye on your assets. So you'll see your cash, you'll see who owes you money, what equipment assets you have, and you're also going to see your liabilities. So you're going to see if you have any loans, you're going to see who you owe money to, if you owe money on the credit cards. And as part of that, you are also going to see your equity. So it includes what's called shareholder distributions and retained earnings. And so the retained earnings, just kind of the basic gist of that, is also where you can see whether you have money to reinvest in the organization. Now, the risk of this is that some people say, oh, look at all these retained earnings. We have all this money to reinvest. Yeah, calm down there. Just because you have this big, beautiful number in your retained earnings doesn't mean that you have the cash on hand. And so that's why you really want to work with these three reports together. So working on those really is going to allow you to dig deeper into the data. And once you are familiar with the basics of these three reports, then you can start adding comparatives. So you have your basic information of how the organization is doing, right? You have your profit and loss. And so you see, okay, am I profitable right this month? Was I profitable last year, or am I profitable for the year? So that's one aspect. You have your cash flow statement. Okay, what's happening with do I have actual money? Because even though you have all kinds of profits, You may not have received that money and your cash may be low. And then you want to see, okay, well, over time, what's happening? Then you look at your balance sheet and then you see, oh, okay, well, overall, the organization has been growing. We have more money to invest and all those things. And so you kind of just look at the big picture by digging into those 3 reports. Now, once you have mastered the basics of it, and do spend a little bit of time, if you're really not familiar with them, do spend a little bit of time reviewing all the elements on it. Make sure you understand every single line that's there. If you don't understand every single line that's there, ask your accountant. That's why they're there. And if you have a really good accounting team, they will be happy to explain it to you. I mean, how many times have I gone, especially earlier on, I had so many questions like, I'm sorry, I don't understand this thing. What does that mean? I don't understand this thing. What does that mean? And at the very beginning, when you start digging into these reports, it gets a little, I'm going to say maybe a little overwhelming because there are a lot of terms. But as time goes by, as you get used to them, then you can actually get more minute information, because then your questions are going to be a little bit more complex as opposed to just like the basics. And so, like I said, a really good accounting team will be your accounting partner, and they are going to help you understand these reports so that you can make better financial decisions. And so really make sure that you have that partner there. And once you understand the basics, then you want to add some comparative components. Of course, they're not all the same for the reports, but one of the things that I feel is really useful is looking, let's say in my profit and loss statement, looking at the percentage of total income. Because then I get to see, okay, well, let's say if revenue is relatively stable, and then I'm seeing this rapid increase in cost of goods sold, and like, oh, what's going on there? And so, or if I see this rapid increase in expenses percentage wise, relative to the income, when income is relatively stable, I'm like, what's happening there? And so it really helps pinpoint potential issues. And once you kind of look at that, you also want to look at performance in relation to the previous period, which would be, let's say, the previous month, or in relation to the previous year even. See comparatively last year, month to month, how are we doing? And you might want to do that for the year as well. So profit and loss for the year, this year, for the same period last year. How are we doing? How are we comparing? Are there trends? It's extremely useful for spotting if your business has quote unquote seasons. Even if you're not a traditionally seasonal business, as let's say campgrounds, well, in some places they're open year round, but even if your business is not traditionally quote unquote seasonal, you may notice that there are certain slowdown periods and certain periods where it really ramps up. And so that will help you identify those periods as well. And so that helps you plan for your recruiting and helps you plan with all kinds of operational aspects. So those reports, yes, they're financial reports, but they tell the story of your business. And so that's why you really want to spend the time in there and understand them. Another thing that I find very useful, and when I'm doing these comparatives, is including the percent dollar amount change. So then I can see at a glance, percent-wise, what was the change, dollar-wise, what was the change from either previous period or whatever. And so, like I said, this really helps spot trends. It helps spot trends in expenses. It helps spot trends in your cost of goods sold. It helps spot trends in isolated issues even. Sometimes you're like, okay, there's a thing here. Let's keep an eye on it. Then you realize, okay, it was a one-off. But if it's not, then it may be something that needs to be addressed. So, of course, As I mentioned, and I mentioned it several times, I'm going to keep mentioning it. Remember that a trusted accountant is an invaluable partner in helping business leaders understand the story that the financials tell. And as those leaders deepen their knowledge, as we begin to deepen our knowledge and really understand what is happening, what those reports are telling us, then we get better at reviewing these reports. We get better at understanding what's happening, and we get more benefit from meeting with our accountant, because again, our conversations are more in depth, because now we're no longer completely lost because, oh, we don't know what this term means. So get comfortable with it. And as you have more and more in-depth conversations with your accountant, that usually does turn into a more informed strategy, and you make better financial decisions for your organization, which leads to a more resilient business.